Hello, and thank you for joining VCCDC's 8th Annual Homeownership Fair. Welcome to our Power of Credit presentation. I'd like to start off by introducing myself. My name is Gabriela Munoz. I am one of the homeownership specialists here at VCCDC. We work with families in preparing them for homeownership through group education, such as our HUD-approved homebuyer education workshop, as well as on an individual basis one-on-one appointments. We are a HUD-approved counseling agency, as well as hold various certifications from NeighborWorks Center for Homeownership Education and Counseling in different areas such as homebuyer education, pre-purchase counseling, post-purchase education, reverse mortgage, and foreclosure prevention. So let's get into the bulk of our presentation today. What is credit? So credit is an interpretation of information on your credit file. And so your credit file is created by every time you use some kind of credit account, whether it's a credit card, you're paying your auto loan, your student loans, your personal loans. All of that is included in your credit file. It is a measure of how well can you repay your debts. The higher the score, the lower likelihood of a risk factor to lenders. The lower the score, the higher the risk to lenders. So who exactly is giving us the score? There's three major credit bureaus. The first one that's shown on the screen is Experian, followed by TransUnion and Equifax, and you'll see their contact information and websites there. So how exactly is our score calculated? So it's made up of different sections, different percentages, and we'll think of it as a pie. So you'll notice the yellow section here, 35% of your score is made up of your payment history. And this is how well have you paid your debts, whether it's a credit card, an auto loan, a student loan, a personal loan, anything that's appearing on credit. And so a late payment on credit is 30 days or more. So if you're making your payment late by maybe a couple of days or a week, it should not be showing up on your credit report. But if you wait till the next month to give double your payment, it will have a negative effect. The next big section that you'll see on here, 30%, is how much do you owe on your credit cards in comparison to your limit. So it is good to have at least one credit card on your credit report to make sure that we're using and taking advantage of that 30% of our pie. Now, how to actually take advantage? You want to keep that balance as low as possible. You don't want to have a high balance or keeping it maxed out. You want to have it as low as possible, less than 30% of whatever that credit limit is. So if you have a limit of $1,000 on your account, then you want to make sure never to charge more than $300 at any moment of the month, because we want to make sure that when that credit card gets reported, it will either show that less than 30% charges on it or that you've already paid it off. The next big section you'll see is the length of credit history. That's 15%. So the longer you keep your accounts open and active being used, the better it'll be for your score. Now, there's certain accounts that we have no control over when they close, and that is usually your loans. Your personal loan, your auto loan, as soon as you finish paying those off, they automatically close. But you do have control over your credit cards. So we want to keep your credit cards open. You want to avoid closing those accounts to make sure we can build up that history that you've had with the company. The next section I'm going to jump to here on the pie is 10% new credit. This is in relation to the times that you are applying for new accounts. If you're going to the stores during the holiday season, they usually offer you 20–30% off of your purchase if you apply for a new account. Even if they tell you in store it's not going to hinder your score, it's not going to have a negative impact, it actually does. So we want to avoid applying for new accounts unless you absolutely have to. There are some exceptions. The only two that exist are exceptions for home mortgages and auto loans. You're able to shop around different financing companies to make sure you're getting the best financing possible, and you want to try and do it within a 2-week window. So that way, if you go to 3 different mortgage specialists to get pre-approved and you're comparing interest rates, closing costs, the loans that they're offering you, you want to try and make those appointments within a 2-week window so that when every single one of those loan officers pull your credit report, it only will adjust to one inquiry, one credit report that was pulled. So very important, we want to keep that within a 2-week window for auto or mortgage loans. And then the last section, also 10%, is your credit mix. And this is if you've had different types of accounts, not just credit cards. You maybe had an auto loan in the past that you paid off, student loans, personal loans. So the mixture of accounts that you have show the difference in responsibilities that you can hold. If you've only had credit cards, doesn't mean that this 10% is in a negative standing in any way. It just means that your score is more easy to fluctuate because of those credit cards being such an important role of the 30% of the pie. So your actual score from each one of those credit bureaus will vary because different accounts may only report to 1 or 2 of these bureaus. So that's why you'll see a difference in score. Your score will be anywhere from 300 points to 850. The higher the score, the better it will be for financing. So let's talk about your credit as power, taking control over it. So in thinking amounts owed, that's one of the big sections of a pie that we had there. So how much you owe makes up 30% of your score. And ideally, we want to keep that balance as low as possible, 30 to 40% on that credit card. Whatever credit card you have, you always want to keep track of how much you owe. So at the bottom of this slide, you'll see if you have your credit cards maxed out, depending on where your current score is, you can see that reduction of points that can happen once the account actually updates your new balance. Somebody with a lower credit score will be impacted slightly less than someone with a higher score. And the reason being is someone with a lower score has already had some kind of negative impact. So this is just kind of adding to that information. We obviously want to try to correct any kind of negative information, but typically this is how a maxed out credit card can affect your score. Let's talk about the slightly smaller percentage, your new credit. How can your new credit have an effect? So the new credit is the times that you apply for new accounts. We want to keep those to a minimum. We don't want to have those inquiries popping up on our credit report that we're applying for new accounts. But there are 2 different types of inquiries that can occur. The most common question I get is, if I am pulling my report every day, every week through my credit card that offers it, through Credit Karma, am I harming my score? And the answer is no, because you're doing a soft inquiry. You're pulling the report yourself. You're not actually trying to apply for new accounts. If you are working, for instance, with us in our counseling department and we're trying to help you in improving your credit, it's going to also be a soft inquiry because we're simply trying to do a review. We're not applying for new accounts. But a hard inquiry is when you actually submit an application for a new account and it stays on there for 2 years. So we definitely want to avoid them as much as possible because even if it's only 10%, it can mean the difference between a lower interest rate or even the different types of loan programs. What is our biggest section that we just saw that has the biggest impact? Our payment history. So how does this impact us? So your payment history is so important. If you've always had your payments on time, we want to try and keep it that way. really try to protect yourself from any kind of 30-day lates. So again, you're late by a couple days, it shouldn't show up on credit, but if you're late 1 month to the next, it will. So you'll notice this is the biggest point reduction you'll see. Even if you have a lower credit score, it's still a big amount of points that will be reduced. Someone with a higher credit score, 90 to 110 points, that's huge. We can always recover from that loss, but it will take time. So very important, try to set up automatic payments if you don't already have that, and just avoid the late payments to avoid the late fees in general as well. So what can we do to establish credit? I know some of you here may not have credit, and what is it that you can do to start your credit report? So the first thing we want to do is pay your bills on time, because we want to build up the habit of being on time. We want to make sure that that's not a hindrance for our score. We're taking advantage of that biggest percent of our score. If you don't already have a checkings and or a savings account, that's going to be my next recommendation, to open them. And the reason being, that will be my first recommendation of going somewhere to apply for an account. They're going to use the way you manage your checkings and saving accounts to see if you are a risk factor for them. If in case you've been with the bank a short amount of time, or maybe they just don't do those kind of credit cards anymore, some banks don't, they may be able to offer you what's called a secured credit card or a secured loan. And that is applying for a credit card but giving your money as collateral, as a deposit. And that works just like a typical credit card. They give you a limit. Usually it's whatever collateral you gave them. If you gave them $300, they maintain your money in a separate account. And then you use a credit card, you pay it off. You use it. If you leave a balance, there'll be interest assessed. And after typically 6 months to a year, they will give you back your deposit, because now you've managed the account appropriately, and they'll convert it to a traditional card. You can also apply for a limited use credit card. This is typically with American Express. And what it is, you can charge any amount you wish in that month, but that becomes your minimum payment. It has no limit. So it's giving you history of being on time with an account, but it has no limit. So if you charge $2,500 in 1 month, that will become your minimum payment. So those are something to be cautious about. And then the last step we have here is being added as an authorized user onto a family member's account. And you're literally sharing just that one particular account. Nothing else from their credit report will show up on yours. Nothing of your credit report will show up on theirs. It's just that account, so we can kickstart the positive information from reporting, especially if we're trying to reestablish credit. That's usually the toughest part, is getting some positive information on there. And so we just want to try and keep that on a temporary basis, just to give us enough time to establish positive information and get our own credit card get removed, so we can avoid any negative stuff from popping up in the future. How long do things follow you on your credit report? So positive standing accounts, accounts that have never had late payments or ever fell into collection, are on your report indefinitely. There's not a set period of time for those accounts to fall off, because there was perfect payment history. You never had anything negative there. So we're just going to keep it for a little while longer. Negative information, though, for instance, collections, will stay on there for 7 years from the original past due date, so that last late payment that you had. So what it means is that it will fall off after 7 years. Doesn't necessarily mean you don't owe it, but they can no longer be reporting on your credit. Bankruptcies, those stay on there for quite a bit more time. If it's a Chapter 7 or 11, it's going to be on there for 10 years. And that is like a hovering cloud over your credit report. So we want to make bankruptcies your last resort if you are contemplating that. It also has a negative effect for qualification on a loan. How long do you have to wait before you can actually apply for a mortgage after a bankruptcy? Judgments. If you've ever had any tax liens owed, those stay on your credit report, even if they are paid for 7 years from the date that they were paid. This is the exception. This is until you actually pay it, then the 7 years will start to count. Student loans, very important. If you are delinquent currently on them, you want to get into some kind of payment plan because that will freeze your ability to be able to purchase. You need to be in a payment plan in good standing with the student loans. Those will stay on there if there was a delinquency of past due payments in the past for 7.5 years. And then the inquiries, as I had mentioned, will stay on there for 2-year history. So who's pulled your credit, where have you applied, we'll be able to see a 2-year history. So a couple of tips I wanted to share with you guys on how to handle collection accounts. The biggest thing I always tell my clients, negotiate for less, starting off at the lowest amount possible and then trying to move up from there. The more recent an account is, might mean the less likely they are to settle for a really low amount versus the older it is, they might be willing to settle for pretty significantly lower amounts. Ask always a collection company if they're willing to eliminate the account as if it never existed. Now, there are some exceptions such as credit cards, auto loans, personal loans, mortgages, because there's been a history of at one point you were on time with them. Always still ask. Never hurts to ask if they can delete it, but it might be a little harder for them to do that. Always keep notes, very important. Take notes of who you talked to, what dates they were, what was the result of that conversation. If you guys do agree to come to a payment, you want to make sure to try and pay with either your debit card, mailing them some kind of personal check, something that can be traceable. After about 1 to 2 months, your credit will begin to breathe and your score will start to come up from any of that negative information from the collection account. Keep in mind, if you are in the purchase process already, you want to make sure to ask your loan officer before negotiating any collections if it's necessary for you to actually take care of that account, or can you still proceed with that account there. We don't want to have any kind of negative effect come back from paying a collection account. So what steps can you take today? I definitely recommend, if you have never pulled your credit report, go through annualcreditreport.com. It is a secure site. You are entitled to a free report with each credit bureau once a year. If you would prefer to reach out to the credit bureau directly, you can also do that and they'll send you your report. It will not include a score, but it's very important to make sure that the accounts are reporting accurately and that they don't have you confused for anyone else. Definitely, if you do not have a budget, a monthly spending plan for your household, you want to try and review that. Put it down on paper so that if you do need to make changes to how much debt you're paying off, we might need to pay your debt off sooner to have an increase in your score, we have to go back to the budget and try and make some changes. If you would like some assistance with correcting any issues, pulling a soft credit report, or going over your budget and seeing how we can improve your credit and your savings at the same time, you can definitely schedule an appointment with one of our HUD certified counselors at vccdc.org/APP. And make sure to visit us at our virtual booth that we have at the exhibition hall so that you can directly talk to us as well. We do have some handouts there that will give you some good tips on how to improve your credit and also a rough explanation of exactly what we just covered. How is our score calculated? And last but not least, I'd like to remind you guys of the additional services offered at VCCDC. We do have homebuyer education courses. We do have post-purchase education courses, our counseling that we do to prepare our families for mortgage readiness, and of course, our mortgage and down payment assistance program, and our real estate agents are here to help. Please, if you have any questions, make sure to write them through our chat. I am here live answering those questions, and I have seen a couple of them already come through. So just taking a look at one of them, We do have one that came in early on, and it was, what debt should you focus on eliminating first? And that's a great question, and I would recommend the one with the highest balance, and that if we're trying to work on the score, because that will have that positive effect in bringing your score up. However, if it's a debt problem in general, we can take two different approaches, either starting with the one with the highest balance, independent of the credit limit, or starting off with the one with the highest interest rates. So it definitely depends on your goal, exactly what are we trying to attain, whether it's eliminating debt for our budget or increasing our score for a loan approval. We definitely want to make sure to take a look at that. And then one more question I'm going to answer while we're here live as well. What's the most important thing you can do to improve your credit? So great question. We want to make sure that we took some of those key points here from the presentation, keeping the debt as low as possible on the credit cards, making sure your payments are on time, and only applying for new accounts whenever you absolutely have to. So if you're visiting with a loan officer and they're trying to get you approved, they have to pull your credit report. If you're at a store shopping, well, we want to make that decision of, do I need this credit card right now, or should I avoid the inquiry and negative impact? So keep asking your questions. We're going to be here. I'm going to be here answering them all on our live chat. So please make sure to put them through, and I'll be here to help you guys out. Thank you.